Assalamualaikum. We are from Group 4. We will be presenting about application of MFRS by Malaysian company, which consists of 5 companies, which are Fintech Global Berhad, Star Media Group Berhad, Hightech Padu Berhad, Iconic Worldwide Berhad, and Damansara Holding Berhad. I am not any NATASYA BINTI HUSSAIN with metric number 280371. I'll be presenting about the important finding of the project under Fintech Global Berhad. So the first one is about disclosure of MFRS 108. In 2018, no disclosure made by Fintech Global Berhad about anything regarding MFRS 108. In 2019, the group and the company have adopted MFRS 15 revenue from contracts with customers effective for the annual financial period beginning on or after 1 January 2018. In 2020, the group and the company has adopted MFRS 16 leases effective for the annual financial period beginning on or after 1 January 2019. Next is about disclosure of MFRS 110. In 2018, the company announced that on 13 April 2018 incorporated the company in Hong Kong under the name of Fintech Global Hong Kong Limited. They also announced that its wholly owned subsidiary Fintech Global had on 11 July 2018 acquired a total of 100,000 ordinary shares. After the financial year, the company listing some of new ordinary shares pursuant to conversion of ICPS. While in 2019, they announced that its wholly owned subsidiary SCSB has entered into a MOU with Hong Kong YR ZXC International Group Co., San Hong Hui Food Limited Liability Company, and Shandong Wangjia Yuanzi Halal Food Brewing Co. to form a collaboration between Malaysia and China to produce and export halal certified food products and some new listed ordinary shares. In 2020, they did not disclose the significant event occurred after reporting period. For disclosure of MFRS 116, Fintech Global Berhad used cost model to evaluate property, plant and equipment, and for MFRS 136, impairment loss is recognized in profit or loss and is measured as the difference between its cost and its current value, less any impairment loss previously recognized in the fair value reserve. Fintech Global Berhad used the same method for both 2019 and 2020. Lastly, the key audit matter in 2018 is about the group has marketable securities classified as fair value through profit or loss, which comprise quoted shares with carrying amount of approximately 1 to 470 million. In 2019, they disclosed about the impairment of amount owing by subsidiary company, while in 2020 are about impairment or written off of non-trade receivable, deposit and prepayments, and impairment of amount due from subsidiaries. That's all from me. Thank you.
Assalamu alaikum, I'm ARISHA, metric number 276790. I'll be explaining about the important findings from Star Media Group's Berhad's annual report. First off, disclosure of MFRS 108, accounting policies, changes in accounting, estimates and errors. There wasn't any disclosure of it in 2020, but in 2018, the group replaced MFRS 139 with MFRS 9 financial instruments. According to MFRS 9, all debt financial assets not accounted for at fair value are required to be recorded with an allowance for credit losses. In 2018, the group also adopted MFRS 15 revenue from contracts with customers. However, in 2019, the group adopted MFRS 16 leases in 2009 leases. Next, disclosure MFRS events after the reporting period. There has been no significant event occurring after the reporting period in 2018 and 20. However, in 2019, in the view of COVID-19, the pandemic is regarded as a non-adjusting event in accordance with MFRS 110. Accordingly, judgments and assumptions used in preparing the group's consolidated financial statements for the year 31st December 2019 do not reflect such effects. Talking about MFRS 116 and PPE and MFRS 136 impairment of assets, in 2018, the group disclosed about the initial cost being recorded for every item of PPE. Unless freehold land is included in PPE are recognized at cost less accumulated depreciation and impairment losses. The group uses a forward-looking expected credit loss model to account for impairment for other receivables and amounts owed by subsidiaries. That's all about Star Media Group Berhad. Thank you.
Assalamualaikum. My name is Muhammad HAIRIL Nazri bin Muhammad Nazir. My number matric is 280108. Now I would like to explain about application MFRS by Heritage Padu Berhad Company. First of all, I want to explain about disclosure MFRS 108. In 2018, the company implemented MFRS 9 financial instrument and classified and assessed as financial asset at amortized cost and equity instrument in non-listed firm. Next, company have adopted MFRS 15 revenue from contract with customer and elect to retrospectively apply MFRS 15 to contract that are not complete at the date of initial application. And in 2019, the company have adopted MFRS 16 leases and elects to apply MFRS retrospectively with cumulative effect. In 2020, the group has elected to early adopt an amendment MFRS 16 COVID-19. Next, I would like to explain about disclosure MFRS 110. On 9 January 2019, the company secured a contract of critical care information system in intensive care unit. On 31 January 2019, the company secured a contract to renew software license of Lembaga Hasil Dalam Negeri Malaysia. On 5 March 2019, the company secured a contract of Pertubuhan Keselamatan Sosial SIMS Management Application System. On 24 April 2019, the company secured a concession contract for Majlis Pemadaran Seberang Perai Pulau Pinang. On 3 February 2020, the company accepted an offer to dispose of subsidiary in Australia. On 22 April 2020, the company secured a contract of the National Registration Department. In the 3 years 2018, 2019 and 2020, all items of property, plants and equipment are initially recorded at cost. Subsequent to recognition, property, plants and equipment are measured at cost less accumulated depreciation and accumulated impairment losses. The group reported any impairment loss of the financial asset measured at amortized cost is recognized profit or loss, and the assets carrying amount is less through the allowance account. Lastly, I want to explain about the key audit method. The analysis of whether the contract comprises one or more performance obligation, allocation of transaction price to one or more performance obligation. During the year, the group recorded profit after tax and compared to the previous financial years. However, the carrying amount of the net assets of the group exceeded its market capitalization.
Assalamualaikum and hi, I am Muhammad SUHEILMEY bin MARZUKI, meeting number 280540. So I will continue with the iconic worldwide Berhad company. So the disclosure of MFRS 108. On 2018, they applied a new MFRS 9 retrospectively from 1 April 2018. It is not expected to have any material impact on the group financial statement. On 2019, the MFRS 9 replaced the incurred loss model in MFRS 139 with the expected credit loss model. On 2020, new adoption to MFRS 16 leases 1 April 2019 using the modified retrospective approach. Then the disclosure of MFRS 110. So on 2018 and 2020, there's no significant event occurring after the reporting period. On 2019, on the date of 2 May, announced a change of name of the company. On 1 April, a subsidiary of the company provides services over a period of 12 months for a total cash consideration of 3,600,000. Then the disclosure of MFRS 116 and 136 on 1/16/2018, all property, plant and equipment are stated cost less accumulated depreciation and any impairment losses. Freehold land is stated evaluation less impairment losses recognized after the date of the revaluation. On MFRS 136, an impairment loss in respect of available for sale financial asset is recognized in profit or loss. It measures as the difference between its cost, net of any principal payment and amortization, and its current fair value. For 2019 and 2020, the disclosure is same as well as 2018, and there's no changes. Then the disclosure of key audit matters. On 2018, the group freehold land and building are stated at fair value. The fair value of the freehold land and building are determined by an independent firm of professional valuers appointed by the group. On 2019, as at 31 March 2019, the carrying amount of PPE was 49,102,636. The aforementioned impairment review gave rise to impairment loss of 1,353,655. On 2020, revenue from property development activities during the financial year is 1612,123,600, as disclosed in Note 21 to the financial statement. That's all from me. Thank you.
Assalamualaikum and good day everyone. My name is QISTINA AQILAH binti IBAT, metric number 281536. So now, I will present on Damansara Holdings Berhad. Basically, DHB involved in property and land development, integrated facilities management, also project management and consultancy service. For the disclosure of MFRS 108, during 2018, DHB has adopted MFRS 16 leases, amendment to MFRS 9 prepayment features with negative compensation, and adoption of MFRS 112 income tax. All of them are effective on 1st January 2018. There is no disclosure on 2019, while for 2020, there is amendment to MFRS 16 COVID-19 related rent concession which effective on 1st June 2020. Next, for the MFRS 110, there is no disclosure on it for the 3 years. For MFRS 116, there is no change for the 3 years where all PPEs are recognized at cost less accumulated depreciation and accumulated impairment loss. All PPE are depreciated based on straight line method except for freehold land. While for MFRS 136, impairment loss for financial asset is recognized in profit or loss. Trade receivable and contract asset use simplified method to determine the ECL. There is no change for 2019, while for 2020, it includes the impairment of goodwill. The last one is the disclosure on key audit matters. For 2018, the key audit matters is regarding the revenue recognition, impairment of assets, as well as goodwill on consolidation. For 2019, there is revenue recognition, valuation of asset, and also the right of use of asset. While for 2020, the key audit matters focus on the revenue recognition and also the valuation of investment properties. Thank you.